Hey everybody, this is Michael Workman with Resin Market Moves. Today is Saturday, March 21st, and let's get right into it. The Strait of Hormuz, as we talked about, it moves over 20% of the world's crude, and over 5% of the world's polypropylene goes through that channel. And with that effectively closed due to the ongoing conflict in the Middle East, we're seeing impact in the market. If you buy resin at all, any plastic resin, it's not a distant geopolitical story. Will show up in your quarter two cost structure. It's our goal to minimize that impact. Let's go around the horn, the different resin families. So let's start in polyethylene. Up to 10 cents a pound of increases for March, 15 cents a pound targeted in April. Ethylene, the key feedstock, has approached 30 cents a pound, with Brent crude hitting $115 a barrel. It's all related to the oil natural gas spikes that we're seeing. Polypropylene, we saw polymer grade propylene hit 51 cents a pound last week, and that's over a 50% jump just this month. We're 21 days in. We did see a producer nominating 10 cents a pound for April, and polypropylene exports are in the 30 cent per pound range in some markets. So we're seeing some pressure upward on the polypropylene market. And polystyrene, benzene is a key feedstock, and that was over $4 a gallon last week. We did see a very large domestic producer out with a 17 cent a pound increase for April, trying to capture momentum with that feedstock increase. PVC continues to be tight. There's 3 to 5 cents of increases here in March, with one supplier targeting an additional 7 for April. And the heavy turnaround season with PVC production plants is compounding that pressure. ABS, we have seen increases out in that market as well now. Celanese, 20 cents a pound. INEOS Styrolution up 15 cents a pound for April. PET, we've seen Indorama announce 10 cents effective immediately, plus a 5 cent a pound surcharge. We did see other increases from the other large PET manufacturers as well. And we'll get into this in a little bit, but getting out in front of what's expected to be a higher than normal bottle season with the World Cup here in North America. Nylon 666 and polycarbonate, April increases are emerging, and that is example of producers trying to capitalize on the momentum in the market, but demand remains very soft in those end markets. So it's only a matter of time, and we're going to see how long this conflict lasts to see how much of that cost pressure will take hold in terms of price with those engineered grades. Everything is moving up. The question is not whether you're going to pay more, it's how much more. So the key points to take away, the first one is this is a supply availability story. It's not just a cost story. U.S. producers are becoming really the world's swing supplier for polypropylene, not because we're the cheapest, but because there's availability. And the exports that I mentioned before, that is a demand pull, and it is real from the other regions. The important second point is that there's still a buffer. North American polypropylene inventories are still around 37 days of supply. Polyethylene stockpiles continue to remain pretty healthy, and there is buffer that exists, but it is being consumed. The buyers who act within that context and framework are going to be the ones that win. The buyers who panic and accept every increase that is put in front of them, those are the ones that are not going to win. And the third key point, specifically in the polypropylene market, Invista's PDH unit has been offline for almost 3 months. Every week it remains down is another week of propylene getting tighter in the market. The restart of that asset is a signal that's important to watch. When it comes back, the most aggressive polypropylene increase attempts are going to lose momentum. And another key point on benzene, above $4 a gallon is running through the aromatics chain simultaneously. It's polystyrene, it's ABS, polycarbonate, and the nylons. It's not one supplier pushing one resin. It's a structural cost input that is affecting the entire portfolio of what we typically call engineered resins. But again, with the demand being so low in all of those end markets, that's where you still have perhaps more leverage than you think you do. So what are the smart buyers out there doing? There's 5 specific moves right now. It's not accepting headline increases. Don't accept those numbers at face value. They're opening bids. They're not settlements. Check out our piece on what a price nomination letter is. It's a nomination. Benchmarking your quarter one actuals before any quarter two renewals, that's going to be really critical. The gap between the index and real transaction data is wider than normal right now. And we're going to watch the Invista PDH reset as a trigger point for polypropylene negotiation, and getting your nylon 6, your ABS, your polystyrene positions reviewed before April is going to be important, because at some point the cost pressure is going to take hold in that market. So what to do in the next month, the next 2 months, and the next quarter. So in the next 30 days, there is going to be active pressure across all major resins. And that's, again, mostly due to feedstocks. Producers have that leverage. The best buyers are the ones that give back less than average. In the 60 to 90-day window, so the key is how long this conflict's going to last. How long is the Strait of Hormuz uncertainty going to remain? When that eases, volatility is going to come off and pricing is going to gradually realign. But that's going to take time. Supply chains do not snap back overnight. Any additional constraints are going to extend beyond the current dynamic. And then I did want to hit on a key point on PET. Summer bottle season is here. The World Cup is in North America. It's going to be an additional demand tailwind into quarter two, which beyond the geopolitical story is already something we were helping our clients think through. That market is going to become harder and harder to push back on. So take action in PET if you need to. The buyers who come into this next quarter and the renewals and the contract conversations, knowing what the actual settlement range is, not what the published indexes say, not what the supplier is telling them, those are the buyers that are going to be able to protect their margins for as long as they can in a market that's like this. Everything else is noise right now. And with that, that's your week in resin. I'm Michael Workman at Resin Smart, powered by RTI. We've been inside these negotiations for almost 30 years, tracking over 10 billion pounds of resins within our network of buyer seller transactions. And if you want to know what your resin should actually cost in this market, how to answer your leadership's continuing questions on how do I know that we're paying a fair price for resin, not what your supplier says it should be, get started with us today. Start your 60-day free trial. The link is below. We'll talk next week. Thanks.